Hart with the Green Market Report, and joining me today is Rob Sechrist. He is the president of Pelorus, a company that you may not be familiar with, but you will soon. This company is a little unique. It's a mortgage REIT, not a traditional REIT. And Rob, why don't you explain to our audience a little bit about that difference? Because most people are really familiar with the traditional REIT that buys buildings and then takes the lease money and gives that back to the shareholders. This is a little bit different. Can you go into that?
Sure. Deborah, thanks for having me, and I'm happy to explain the difference. Most people are unfamiliar that there's more than one type of REIT. A traditional REIT owns properties like IIPR. A mortgage REIT simply means that is a lender that's able to get the same tax advantages of a traditional REIT. Those tax advantages, just to re-clarify, are 20% savings on your federal taxes. You only pay state taxes in the state that you're domiciled. And it also cleanses the possibility of UBTI, which is potentially caused by lending if you have lines of credit or leverage on your fund.
Great. And so your company specifically focuses on the cannabis industry. And what you guys do is you help cannabis companies that need money to build out their facilities, which can be a really expensive endeavor for a cannabis company. How are you approaching these cannabis companies with this help?
Sure. So our background is what we call value add lending. And in our world, value add, that vernacular means that we are improving the property with a portion of our loan is going back into the budget, back into the property with a pre-approved budget. Typically, it's going to be tenant improvements. It could be ground up construction, but this is the largest newly created asset class in the country. We've extrapolated the data that it's about $50 billion real estate asset class that just magically appeared. And so when that asset class was created by the legislature in each of these states, those properties actually, in order for them to be legal, they need to have, the real estate needs to be approved. And that side is one element of it. It has to be built out. It has to be purposed for cannabis use tenant. And then the tenant, the cannabis use operator, must also be approved by the state. And so those two elements, once they're plugged together, that is a legalized property. And now you're on your way, and it's one of the 50 billion.
And to your point, with cannabis, it isn't so easy to just go to a bank and get a construction loan. So you've put up all this money to buy this building. You've spent all this money to get these licenses and these applications approved. And so a lot of these companies have spent millions just to get to basically square one. Yeah. And that's really just the first inning of the ball game. They still have to build out these facilities, which is even more money. A lot of times they're kind of starting to get tapped out at that point, and they can't just go to a typical bank and say, hey, we got to build out this building. We're a legit company. We're doing things that are legal. But the banks are just like, no way. They want nothing. The major banks want nothing to do with this, right?
Yeah, the major federal banks are not in the sector. The state banks and credit unions, there's 684 that are doing deposit relations for tier one plant touching operators and businesses. And of those banks, there's probably a few dozen that are actually lending, but the banks are difficult to get loans in general. And they certainly are not in the value add lending space at this time. And more importantly is that when you go to build a cannabis facility, typically these properties, the tenants are doing 10 to 15 times more revenue per month than a non-cannabis use tenant. And why I'm giving that and focusing on that is that to be focusing purely on your rate and points for the loan, as opposed to the speed of getting that property up and stabilized, is very short-sighted. You want to get your property built as quickly as possible. Our average borrower takes about 12 months to build and stabilize their property. And we're typically processing 50 to 100 draws for that, for the borrower to be reimbursed for the expenses that they put out for the pre-approved budget. So for example, if your facility is doing $1 to $2 million a month, or has the ability to do that, and you want to save a couple of percent, and even if it was 10% difference between our rate and a bank rate, that premium might be $1 million or $2 million in a year. But if you're doing 1 to 2 million a month, that premium is absorbed if we save them 1 month. Typically, we're going to save at least 20% compared to other private lenders, best in class, and probably 6 months with a bank. And so it's a no-brainer once you analyze it. And unfortunately, the cannabis use borrowers are so focused on brands. They have so many things going on, compliance, inventory, genetics, all this stuff that they're trying to deal with. A lot of them haven't been in a construction loan before, and they have only done their own home mortgage. And the only thing they ever knew at that time was the rate and the points. And so they're not aware that you need a high performance loan, and they might get into a loan and realize this isn't even going anywhere. I have to advance the money. I'm not getting reimbursed fast enough, and the project comes to a stop. That is not the situation you want to be in. Plus, Pelorus is the first dedicated holistic lender for the cannabis sector back in 2016. And we look at the cannabis use properties as a holistic approach. A bank does not do that. We want to make sure that we provide all the money that is necessary, or make sure that all that is encapsulated in our loan that gets the property acquired, built out with the tenant improvements and the equipment to make sure that that tenant can actually start operating. A bank would not provide all those features to that loan. And so you might have a situation where the tenant doesn't have the money because the property is not cash flowing yet, and they're not able to go raise that equity that's necessary for the equipment to build it out. And this equipment is enormously expensive. Some of the equipment as a whole for the project might be more than the purchase price of the building. And so if you are trying to go raise that money for equipment for a building you don't even own, it's a very difficult challenge. So you want to have a solution that is holistic in the approach, and we were the first to do that.
And one of the things that kind of differentiates Pelorus is your rates are quite high, but to your point, you're getting the money to the client faster, correct?
Yeah, we offer high performance loans to get to achieve what the borrower is looking to do. 100% closing ratio of all the transactions that we've ever done. I don't know if any other lender can say that. More importantly, or just as importantly as closing, is to make sure that facility gets up and running and built as quickly as possible. And so you need to look at that ratio of what is the pricing savings that you would get with a lower pricing loan as opposed to what is the opportunity revenue that we lost by not penetrating the market and not getting this facility up and running as quickly as possible. So as to today, most of the cannabis community knows who we are and knows that this is the place that they want to go to get a facility built.
And how much money have you guys raised to date?
We've deployed more than 185 billion. We've got about 60 million going out in the next 30 days or so. So we'll be to 250 million here in the very near future.
And you're working with some pretty big names. Like I saw you're doing a deal with Acreage Holdings for a fairly large.
Yeah, we did it. We did a deal with Acreage Holdings in Q4 of last year. And by the way, they are big enough that they could have gone to an institutional rate. And so in that specific scenario, their board came to the realization that they needed to look at the entire cost of the capital, not just the pricing of the loan. And they quickly determined, and in the end, that was the direction to go. After our pricing does shock people, but that's because you're buying a high performance loan. There's a lot to go in to process an unlimited amount of draws in 1 to 3 days. Nobody else can do that. That is so important. And that's what you need to be focused on. If you want to go and take your time and have the lowest cost, and it really doesn't matter how long it takes for that facility, then you probably want to start with another lender.
That's pretty interesting. Now, we've seen a lot of situations in Canada with regards to overbuilding. Some of the companies like Canopy Growth has shut down some of their indoor facilities. Do you feel that because the United States is so early on in its legalization that we're not going to be in that kind of situation, that we have companies that could get overbuilt with regards to facilities?
So 2 comments there. In Canada, as far as we know, there's nobody that had built 100,000 or 1 million square foot facilities that were at scale in the entire country and anywhere in the world. And so you have people that are trying to scale from 0 to 1,000, or whatever on the first try. And by the time that facility gets built, you realize we didn't build this correctly, and you have to write that whole facility off. So they didn't have a learning curve, and they made mistakes up in Canada that I don't think that you'll see duplicated, and certainly not to that same extent that was that happened up there. So one is that you really only had gray market or illegal market operators that were mostly operating outdoors. Some of them might have been had some indoor greenhouses, but they would have been tens of thousands of feet, not hundreds of thousands or millions of square feet. And so when you go to that scale, you have different challenges that you're trying to deal with. And if you get it wrong, you've already built the facility before you realize we didn't configure this properly. And it's actually less expensive to sell this property and to go somewhere else. I don't know how Canopy justified what they did, but what we did when we started in the sector is we analyzed it from 2014 when Dana Rohrabacher, our local congressman, is a friend of ours, passed the Rohrabacher-Blumenauer amendment at the time. We started analyzing the sector because we realized that our skills in value-add lending was immediately applicable to this sector. And we analyzed it. We originated our first transaction in 2016, and we started small. We only did small transactions to make sure that not only were we learning what the borrowers needed to do, but they were learning as well. And so we scaled with small facilities, 10,000 square foot, 20,000. Now we do 100,000 square foot and larger, but we worked our way up to understanding the market. And then secondly, we also built the first proprietary database where we analyze each of the cannabis operators that are licensed within each state. We identify who they are, what types of licenses they have, and we associate what properties they're in. We look at the average build cost, the average price per square foot of the universe of properties, and for each of these types of licenses. So we know what the size of the capacity of the market is existing. And we also do some other things with other technology that we look at to understand, is this market reaching capacity from a production size? Is it oversupplied? Is it undersupplied? And so we're monitoring all of that stuff. So we're using data and facts to analyze this. And typically in most lending sectors of the country, there would be a hedge fund or there would be a third party doing this and spending millions of dollars to analyze this. Well, we needed that data. And so we had to make the investment ourselves. And so today we have a very robust what we call the big data project, that we pull all that data and extrapolate it to help us make our decisions.
And I was wondering with regards to risk. So risk for your investors. In this situation, you're lending money to these companies to build out their facilities. What is the risk that they potentially aren't able to complete that facility, whether they've run into other problems elsewhere? Certainly it's the cannabis industry. We've seen lots of situations blow up pretty quickly. Have you seen anything like this? And have you seen, other companies willing to then jump in and take over? What is your situation with that?
Sure. So we've originated more than 5,000 of these types of transactions, and whether you're a cannabis company building a facility or somebody else building a facility, that's an issue that we have to de-risk or look at. And so the way that we start is we first start with a feasibility review of the budget to make sure that that budget is sufficient, regardless of who the contractor is. If we had to replace the contractor, that there's sufficient capital. And it's also reviewed to make sure the water's there, the permits are in place, the electricity has ample to supply that for what we're building, et cetera. And we take that budget and we run it through our data to make sure that it's sufficient, no matter who we use for the budget, that there's enough capital. Then we build a contingency as well to just in case there is some overruns. So we start with that aspect. And then as we are going through that project, the borrower has to advance the money first. Then we go and verify that the invoices have been paid. We get proof of payment. We get lien releases from the contractors to make sure that they can't lien the project. And once all that's been reviewed and completed, then we do a physical inspection to verify that those went into our property and you get a percentage of completion. So we've de-risked that, and we're prepared to fund that project and complete that project, whether it's with our borrower, that contractor, or if we take it ourselves. So that's on the property side. As far as the tenant or operator side, we also analyze to make sure that we've got a path through to replace that tenant ourselves, if necessary, if the borrower failed and if the tenant failed. So we have the ability to complete the building and we have the ability to replace the tenant. As far as our portfolio, we haven't seen a situation where the tenant has not been able to be replaced. We don't have any transactions that we've had to replace the tenant yet. We do have one of our borrowers that replaced another facility next door, not ours, but they did it in 90 days. And so we use that as a case study to make sure that what we're thinking is as possible and what the timelines are. And, you know, once these facilities are built out, they have the power, the water, the infrastructure, the general configuration isn't going to change that much. Most of our facilities start with indoor cultivation, and then they might have some processing or some extraction and some other things in there. Once you've got kind of that layout, you know, different operators might reconfigure within those rooms, but the general gist of it is going to be the same. And commercial properties are a lot easier to reposition walls and things than in a residential house where everything's load bearing. So it's a different situation.
Absolutely. So what are the plans for Pelorus for the rest of the year? Are you guys going to continue to raise money, keep, I would assume, keep lending?
Yeah, we're scaling the company. We continue to add to our team. We just opened a New York office to get a presence on the East Coast. Our goal is to get to $1 billion assets under management. Our investments in the company from our team and our people that we work with are positioned on that, on growth and to maintaining our position as the #1 value add lender and the first and the most experienced in the sector.
Great. Well, there will certainly be a lot of activity happening in the Northeast now that all the legalization is happening in New Jersey and New York. Rob, thank you so much for taking time out of your very busy day to talk to Green Market Report.
Thank you so much.